And welcome back again to Walle's FAIRtax World. Our CPA buddy Jade Walle is with us again for his quarterly meeting. Good morning. How are you?
Great, Bob. How are you?
How are you getting through this lockdown? You all still locked down out there? Are you still getting a little better? I see you're still working from home.
We are working from home, but Colorado has loosened up a little bit, so you see more people out and about, and the toilets are starting to dwindle down a little bit.
Okay. Well, we want to get into a show today about problems and solutions. And so let's go all the way back to the beginning, the founding of the country. I'm going to ask you to take your CPA hat off for a minute, put on your historian's hat. You don't have one of them little three-quarter Patriots hats, do you? Okay. That one's in the closet. Okay. Well, anyway, talk a little bit about how it was, how the country was, and how it was working, especially from your, the fiscal point of view, from its founding forward to say, let me just pull a date out of the air here, like maybe 1913.
Oh, that sounds good. That's a good year. It has no meaning for us in the tax world whatsoever, right? No, I think it's important. If we're going to talk about a problem and solution model, let's talk a little bit about the history, because if we don't understand the history, we're doomed to repeat its failures, right?
Yes.
So our original Constitution, Article 1, Section 9, had a clause, and it read, "No capitation or other direct tax shall be laid unless in proportion to the census or enumeration herein before directed to be taken." Now, you can kind of tell that's...
Translate that into English.
Yeah, 250-year-old jargon and vernacular that we need to translate. So I had to look up capitation and what that means, and it's basically a fee or a taxation in proportion to how many people you have. So, if I'm going to tax the educational institution $100 and you've got 50 kids, you'd spread that $100 over the 50 kids in proportion to the number. Mm-hmm. And so really what you're getting at here, for clarity, you've got indirect tax, which we think of as a consumption tax, and a direct tax, which is an income tax. And so they specifically talk about direct tax here. And so what the crux of what the constitutional writers were getting at is no direct tax, no income tax. They knew about the issues it would cause and some of the problems associated with it. They're actually, in many ways, beyond their years in wisdom, and they knew the problems it would cause. So that was how the country was founded. So if we think about indirect taxes, the founders realized that it really didn't lend themselves to abuse, the system of indirect taxation. And let's go early on. How did the country in its early years, late 1700s, early 1800s, collect its taxes? In around the year 1817, in the early years, all internal taxes for the federal government, all were collected on things like excise taxes, so sales taxes on sugar, tobacco, alcohol, carriages. No cars back then, carriages. And so that's how we started out. That funded the federal government. And you have to realize, in the early founding times, in the late 1700s, the predominant belief, not 100%, but the predominant belief was that about 95% of all government should be done at the state or local level, unless in a time of war. So that was the mind frame that this Constitution was written under. Certainly not the case.
They've kind of gotten away from that, haven't they?
Just a little bit. Just a little bit. The size of our federal government's enormous.
Oh, mercy.
So, no commentary on what's right or wrong. We'll let people decide that there. But in 1817, all the internal taxes, so the excise, the sales taxes on sugar, tobacco, alcohol, carriages, were done away with. And they collected 100% of the government's revenues from tariffs on imports. That might ring a bell with certain things.
Yeah, well, that's kind of like what we do in Florida here, where we tax stuff that the tourists pay that the locals don't.
Yes, yeah, that's exactly right. That's exactly right. So we. In a problem solution model, which we're trying to do here today, is it's important to introduce a villain, right? All the great stories.
Yeah, I was just about to notice that. In every good story, whether it's fact or fiction, you've got to have a. That's why Kyle Busch is in NASCAR, okay? I'm going to catch it for that from some people, I'm sure. But let's say, what happened in 1913 as far as our villain introduction goes? Sure.
So, let's talk about the lead up to 1913. So we talked about 1817. In 1848, an important document was written that actually started to pervasively creep across the world and into the mindsets of people. The Communist Manifesto was written by Karl Marx in 1848. And it had 10 goals of what the perfect communist society would be like. Mm-hmm. The second goal was a heavy, progressive, or graduated income tax. Yeah, I'm amazed at how many people don't know that. Yes. And, again, if you take a very neutral, let's be Switzerland for a second and take a neutral view and just look at it as an idea in 1848 and not all the horrible murder and genocide and destitution that it brings. If we just look at it as an idea, it was an idea, and that idea started to permeate and percolate across the world. Mm-hmm. And then if you think about also in the Communist Manifesto, the third goal, the third trait of the perfect society was the abolition of all rights of inheritance. So if we think about the death tax, or in the technical term, the estate tax. The estate tax, yeah. Two very prominent concepts in this manifesto that started to permeate. So despite the constitutional constraint we talked about earlier, an income tax was finally enacted around the Civil War. We need money for the war, right? Mm-hmm. And so an income tax was enacted, even though it wasn't constitutionally allowed, but it wasn't challenged at this point. But then by 1872, the people basically stood up and said, no, okay, it was for the war, no more, right? Mm-hmm. I think we'd been done with the Civil War for a few years by that point. Yes. People didn't enjoy having an income tax. But over the next 20 years, so fast forward from 1872 into the late 1800s, over, 68 different bills were introduced to bring about an income tax again. 68 times. So even back then, the politicians had an insatiable desire to get their hands on the people's money. Exactly. And, Congress wasn't as prolific then as it is now, right? With the number of bills introduced every day that you and Ron talk about all the time on FAIRtax Powered Radio. That's insane. 68 over 20 years, that's multiple times a year trying to get the income tax into legislation. But so finally, let's fast forward to 1894. A direct tax on the incomes of American citizens was enacted, and corporations, so income and corporate, individual and corporate income tax. And the name of this act was the Wilson-Gorman Tariff Act. Never heard of it before, right? Very soon after, the income tax was finally challenged, and it made its way all the way up to the Supreme Court. And in 1895, in a ruling called Pollock versus Farmers Loan and Trust Company, the Supreme Court struck down the income tax because it was a direct taxation. And we talked about Article 1, Section 9. It wasn't in cohesion with the U.S. Constitution. So that's when the Democrats of the time began a relentless campaign for a constitutional amendment to allow for an income tax. And the promise was, we're going to soak the rich. It will not affect you, normal American Bob Paxton, you, Ron and Elaine Malero. It will not affect you. Because 99% of the... Where have we heard that story before? Trust us. Give the government a lot of power to do something, but trust that will only apply to 1% of the people, right? Yeah, right. I don't see any problem with that whatsoever. There's some sarcasm there. At this time, if we think about a lot of the ills in today's society, class warfare is so prominent. So in a lot of times, sometimes I get into the mindset of, things must have just been wonderful in the past. But we can even see here, 120 years ago, class warfare was alive and well, and it was the foundation for the push for the income tax. So, Bob, Republicans of the time, they played a game. They said, okay, we'll go along with this constitutional amendment, thinking in their minds, no one in their right mind will pass a constitutional amendment to allow an income tax. but they underestimated the foundational reason that the Democrats put the constitutional amendment forward. And it really gets down to, if you really boil down to a root cause, right? That's always important when you look at a problem. It's envy. And so if you think about the deadliest 7 sins, envy is the deadliest of the 7 deadly sins.
Definitely there on the list.
And this whole thing is sold with, hey, those evil rich people, let's soak them, let's take their money. They are so rich anyway, it's not fair to us as the working class Americans. That was the foundation of it, envy. Let's go to what happened here. So you see the Republicans playing this game, but guess what happened? It got traction, it got wheels, and bam, the Senate and the House pass it, and it flew through the states, 75% of the states having to ratify the constitutional amendment, bam, bam, bam. And I think it's got to be one of the worst political blunders, if you look at the Republican Party, in the history of politics in the U.S.
I'll go along with that.
So the result, the 1913 16th Amendment that allowed an income tax.
And how long after the amendment was ratified did it take to actually get an income tax on the books? Not long, I would imagine.
Yeah, I think it was very, very soon.
Okay. And how long did it take that thing to morph from, well, I'm just going to hit the 1%, to where it was expanding to where it was just nailing everybody? And not only were you having to just write a check at the end of the year, they were taking your money out of your paycheck. I think that all happened within less than a generation. That's
right. So at first it really was, okay, only 1%. And then by the time World War II came around, so we're 1941, they actually used Donald Duck back in those days, they'd have movies and they'd have a little intro trailer with war updates or little bits of American propaganda.
Newsreels, they call them.
Yeah. And they had actually employed the services of Walt Disney and had Donald Duck talk about how it was your patriotic duty to allow for withholdings from your paycheck, like in a payroll tax kind of situation, and federal withholdings as you go, instead of paying at the end on March 15th. It used to be March 15th instead of April 15th. And because you used to just pay at the end, and you kind of had a feeling of what my income tax obligation was. And the percentages were so small, you could actually do that. And then withholding came in by World War II.
Oh, mercy. I think, well, you can put your historian hat down and put your CPA's hat back on here. A lot of times people will get the idea, something's wrong here, but I just can't really quite put my finger on it. So, and I imagine that people they bring home their paycheck, gee, I'm making $10 an hour, I'm working 40 hours a week, I make $400, and they look at their pay stub and that's not even close. What's going on here? Put your finger on some of the things that are wrong specifically with the income tax system as it exists now.
Yeah, no, it's a great question, because everyone can feel something's not quite right. But, unless you're, a CPA or you deal with this all the time, you might not be able to articulate. So let's go through.
That's why we're talking to you.
Okay. I think the biggest thing is that people feel is freedom. And, as just being born here in America, no matter your political persuasion or where you're from, you have this understanding that there's a certain freedom we have here that the rest of the world doesn't necessarily always get to participate in. And so I think freedom is the number one most important problem with the income payroll tax system that we have. And so you think about our American Constitution, the whole thing is founded upon it. And even slavery at the beginning, if we talk about our Constitution, it didn't reconcile with our Constitution and our notion of freedom. And then when President Lincoln, issued the Emancipation Proclamation in 1862, things started to reconcile finally in our freedom, love, and American system, which is, I think this is so amazing. It actually had a mechanism. It was so amazing. It had a mechanism built in to reconcile the ills and the wrongs and the evil that slavery was. And in 1868, America ratified the 14th Amendment, which prohibited the state from depriving anyone from life, liberty, or property without due process, and also guaranteed equal protection under the law. And so, even though we started out so amazing, we had an ill and we corrected it. And so all of us, no matter your race, background, creed, everyone appreciates that freedom.
Okay, so let's say that happened in 1868. So that was before 1913. How did the income tax get around that provision? I mean, you're not supposed to do that to people.
Good question. And let's talk the 14th Amendment, then let's also go through the Bill of Rights.
Sure, go for it.
The Bill of Rights was established really to allow individuals to have freedom. And I always like to point this out that, you know, sometimes you'll hear this term, well, what's for the greater good? And I always like to start out by saying our whole system of government was based on individual liberties and rights, because anytime you look past individuals and talk about some nebulous society or greater good, that's when individuals can be harmed, their liberties can be taken, because the ends justify the means and it's for the greater good. Mm-hmm. So our whole system, we have to realize, is based on individual liberty, individual freedom. So we'll start with First Amendment. Free speech. So our income tax, actually, a lot of people don't realize this, was amended in 1954 by then Senator Lyndon Baines Johnson in what's called the Johnson Amendment. You might have heard of it, but it basically makes it illegal for 501c3 not-profit corporations from endorsing a political candidate. You as that charitable organization, you have lost an element of your free speech rights under the First Amendment.
That was in one of Steve Hayes' chairman's reports not long ago.
Okay. Yes, that's right. And so again, a lot of these things happen. They're a chip here and a piece here, and it happens slowly. It's like that frog in the pot of water that if it turn up the heat slowly, they don't realize they're getting boiled. Let's talk about the Fourth Amendment. The Fourth Amendment guarantees no illegal search and seizure. And so the income tax brings with it, I call it, it's a power of a Gestapo-like secret police, which they're allowed to seize your personal bank accounts, your other assets, even without letting you or I know what we're accused of. This civil asset forfeiture is a complete injustice to all of us. And the IRS summons authority, it's under Tax Code Section 7602, allows the IRS to obtain records of every description, your personal effects and affairs, from anyone without showing probable cause and without a court order.
Yeah, I know. We've talked about that on FAIRtax Power Radio quite a good bit. How do they get away with that? That is a direct violation of the Bill of Rights.
It is, and so it's interesting.
I mean, they don't even have to accuse you. They certainly don't have to be convicted of anything. They really don't even have to bring charges. They don't have to accuse you of anything. They just think in their head that something's going on, and they've got all this power they can bring to bear against you.
Yep. So the Fourth Amendment requires a warrant for search and seizure, and it can only be issued for probable cause when it's present. But utilizing the legal concept called in rem, the crime, according to the IRS, attaches to property, like your cash in your bank, or your house and your other property, and that property is not an individual, and so it's not protected by the Bill of Rights. That sounds like legal trickery, doesn't it?
That sounds like somebody's doing an end run around the Bill of Rights.
It's audacious. It is audacious. We don't think about it often, and until it happens to you or me, then it doesn't really come up. But when it happens to you and me, it will consume our lives for years, and it has done so for so many people already. Yeah,
fortunately that hasn't hit either of us, but we've read stories about it.
Absolutely. I love what you and Ron talked about, Carol Hinders, on your FAIRtax Power Radio.
Yeah, that's the name I was trying to pull out of my memory. I couldn't get it.
Yeah, she had a Mexican restaurant, cash-only business in Iowa, if I remember correctly, and she had her bank account seized. She didn't even know what happened. No one told her anything. Crazy.
Yeah. Well, how do they find out about that? I mean, how does the IRS find out that you're depositing $9,000 here and $8,000 here, and then just barely staying under that statutory $10,000 limit?
Well, I'm not an expert, Bob, but I understand bank employees are encouraged to watch out for what's called structuring, right? When you're trying to avoid the required $10,000 reporting to the federal government and the IRS when you have a $10,000 or higher deposit. And so if they see a bunch of deposits that are cash, and amounts that are near but under $10,000, they actually encourage the whistleblower type behavior, if you will, from bank employees.
That sounds like the being deprived of property without due process.
I think so. And let's go to the Fifth Amendment, too.
Yeah.
So the Fifth Amendment is due process and no self-incrimination. We can't be deprived of property, life, or liberty without due process. And so I think it's important to ask, this is an old term that we learn in history, but what is due process? It requires the government to provide a clear notice of their claim against you and allow a hearing before executing enforcement action. Sounds fair. Mm-hmm. Sounds reasonable. The IRS, however, issues summary judgments and enforces them prior to any judicial determination whatsoever. You're presumed guilty until you prove that you're innocent. And Bob, does that sound like what the Bill of Rights guarantees you?
It does not. That sounds like the exact opposite of what the Bill of Rights was trying to prevent.
Absolutely. And the Fifth Amendment also guarantees each of us the right not to have to incriminate ourselves. The burden of proof is on the prosecution, right? We've always heard that. Well, not with the IRS. Again, we don't even recognize the freedoms that have been stripped away from us. Each year, when you fill out a tax return, you might not realize it, but you're signing your return under penalty of perjury.
Yes.
And this clearly violates the Fifth Amendment's protection against self-incrimination.
So explain a bit more how a tax return can be a self-incrimination. A lot of people don't get that connection.
Sure. So when I fill in what my income is or what my deductions I'm claiming, you're taking a position. And sometimes, believe it or not, with 75,000 plus pages of tax code statutes and court cases, there's actually ambiguity in gray areas.
Oh, really?
So, yeah, it might come as a surprise.
I'm shocked. There's ambiguity in the tax code. Somebody go tell Congress.
Yeah, and so even though we're all as citizens responsible for all those 75,000 pages, what if you accidentally get something wrong and you put this number instead of that number, or interpret this clause just a little bit different, with good faith and with no ill intent, no illegal intentional invasion? You have basically just incriminated yourself and swore to it, and you've had to do that, and you didn't even get the opportunity to let the government have to prove a case against you.
Oh, that's insane. We've got to fix that. Let's get rid of the whole system. How about that?
Well, I think we're halfway into identifying that we have a problem here, and we're going to really pound on this point, because to really get people motivated to go for some kind of solution, we've got to all agree that there's a problem. So I think we're doing good so far today,
Yes,
Bob.
I would say there's also a problem relative to the Sixth and Seventh Amendments.
I think so. You are very astute, my young colleague. The Sixth and Seventh Amendments are a right to jury by your peers and a speedy and public trial, and to know your accusers. You're entitled to see who's accusing you. Your tax court's rights, should you ever end up there, do not include a right to a jury by your peers, and you absolutely do not get a speedy or a public trial. Often, when our bank accounts are seized and frozen, we don't even know who or how or by whom, and the IRS doesn't inform us beforehand. So Bob and Ron on FAIRtax Power Radio, you've outlined numerous cases of this abuse, and each civil asset forfeiture case takes years, plural, years, to settle at great personal cost to the taxpayer, with you and I as taxpayers footing the legal bill for the IRS. So let that marinate for a second. We have to pay our accusers and in our torturers' legal bill. It just blows my mind.
Yeah, and what
we all pay. Go ahead.
What we have found as well is that the IRS uses all of this power that was intended to help them catch criminals, and instead of going after criminals, they're going after people that they know do not have the resources in either time or finances to fight them. They're just basically pickpockets.
It really is. That's a great analogy, Bob. But you and Ron have covered this, where some of the real tough cases, the illegal underground criminal activities, and the real dirty stuff where there's just massive and widespread tax evasion, the IRS is like...
Those guys have the resources to fight it.
Yes.
They have the resources to fight it. The lady with the Mexican restaurant doesn't.
Exactly, and that's a form of evil in and of itself. There, you're just going for the low hanging fruit. Where I think studies have shown 90% of the time it ends up not being a valid tax claim by the IRS, but that cash only Mexican restaurant business in Iowa, they've been fighting the IRS for 2 years, and at the end of it, the IRS might just say, you're right, sorry, and then they're out hundreds of thousands in legal bills. And that's not right. That's not the freedoms that are embodied in our American Constitution.
No, there should be recourse for that. They can't drag your name through the mud, take all your money, make you fight them for 2 years, and then say, oh, okay, you're right, we're gone, sorry. And probably don't even say sorry. Just say, all right, we're dropping this. Have a nice day.
Right? It's just not right. Lastly, 14th Amendment requires equal protection under the law. And with all the violations of individual freedoms we've discussed, they also represent a lack of equal protection under the law that's guaranteed by the 14th Amendment, since not everyone is treated the same under the income tax laws, like you just pointed out very eloquently, Bob. The laws, the courts, the seizure of property, it's not an equal treatment, and that violates the 14th Amendment.
Oh, it does. Now, what about using phone data to track people? That's an interesting thing that I've just become aware of.
Yes, I just read about that in Saturday's Wall Street Journal, actually. The way I understand it, and it hasn't been litigated yet, but the IRS experimented with purchasing location data from marketing firms who get it from other cell phone data, etc. And they're able, basically, the way I read the article, is to have a pretty good accuracy in triangulating what people are where through public records, and then anonymous cell phone data, you can put 2 and 2 together basically and figure out what people are where. And so the IRS was toying around with, well, maybe I can see where a perpetrator is spending time, and that can add evidence to a case to go try and seize their money.
Oh, yeah, it's amazing how much data these little things collect on you, even when they're turned off. But everybody's got to have one these days, so they don't realize it. Elaborate a little bit about how the income tax causes problems for our economy and our job situation.
Absolutely. So if you're new to the fair tax, this takes a few minutes to get your head around, but the cost of our income tax and our payroll tax, and then our employers matching the payroll tax that our employees pay, all those taxes at every stage of production get embedded into the cost of doing business. And so I always find it funny, politicians sometimes are either ignorant to the fact, or they're not ignorant and trying to deceive people by saying the evil corporations need to pay their fair share of taxes.
Oh, yeah, I've heard that before.
Yeah, I mean, it's an easy, low-hanging fruit. And if you listen to the 5-second soundbite, it kind of gets your back up. Yeah, that's not right. It gets you all upset. And then you have to think, what are the economic realities to how costs are accumulated in business, and then what prices are ultimately charged to the end-use consumer. And so the real reality, Bob, is taxes, just like labor, your overhead, your electric bill, your fuel, your machinery, all the costs that you employ to produce your end product or service, the taxes you pay, those corporate taxes, those payroll matching taxes, the taxes that supplier paid to deliver you the widget, all those get bundled up into the cost. And then when you set your price, you have some profit margin in mind that will, with competition, be palatable to the end user public. Mm-hmm. And when everyone has those taxes, it's just another cost of doing business, which raises the cost to the end use consumer that you and your wife and me and my wife, we all pay at the cash register.
Yeah, people understand intrinsically that when they purchase something, the retail price that they pay for that product includes the cost of the materials that went into it, the labor it took to went into it, but they don't figure out it always so includes their tax liability, includes what they have to pay their accountants, includes their electric bill, it includes the gas they put in their trucks, it includes every cost of doing business has to be covered by the retail prices that the consumers pay, or the business goes away and there's nothing to be had on the shelf.
That's exactly right. Spot on, spot on. Here's some other problems with the economy and the income tax. Our paychecks that we take home as employees, they're redacted by certain amounts, aren't they? We don't, like you said earlier, we don't get our whole paycheck because there's tax withholdings, right?
And the regressive payroll tax is there's all kinds of problems with that. First, the Social Security, Medicare programs are only being funded by people working for a paycheck. People that are making their incomes other ways are contributing zilch to the system. And then, of course, everybody gets hit with the same percentage, and that is the textbook definition of what's a regressive tax.
Absolutely, and it hits our working poor the hardest, which really gets me. I don't like that. And if you're trying to, get a leg up, maybe make a better life for yourself, save up enough money for education, that payroll tax takes nearly 10% right off the top. Yep. Even if you're just making, let's say, $25,000 a year. Is it right for that person making $25,000 a year to have $2,500 or near that just taken off the top immediately?
No, especially the fact if these go to fund programs, Social Security, Medicare for elderly people. What happens if you die before you get to reap any benefits? All that money is just gone. Yeah, you don't get any of that back. It doesn't come back into your estate. It's just gone.
Yep. So let's take about two famous rich people we know, Warren Buffett and Elon Musk. He's a new guy in the news, right? SpaceX.
Oh yeah, he just shot a Tesla up into space not too long ago. He makes those as well. Go ahead.
He needs to send some FAIRtax banners up into space.
Absolutely.
Maybe. Well, so Elon Musk isn't earning a paycheck. Warren Buffett isn't earning a paycheck. So like you said, they're not paying one bit of Social Security and Medicare tax, unless they have some other self-employed business somewhere. So that's not right. We'll talk about later when we talk about the solution. The FAIRtax fixes all that, but I don't want to skip ahead.
Okay.
Bob, another cost to our economy. There's illegal evasion right now. PhD studies prove of $800 billion a year. That means this year in 2020, the U.S. government will take in $800 billion less than it should based on current law, and because it's due to illegal evasion, not accident, illegal evasion.
Yeah, and it's amazing how people just justify that, and they really don't think it's doing anything wrong. If you're not cheating on your income tax, you're not playing the game right. Is what's the thought that's in a lot of people's heads.
Yeah, that's exactly right. You and I have talked about it before. The incentive structure is set up where our most sacred piece of property that we earn and can turn into other property is our income. And so when you tax that, I'm not saying it's right, the human psyche immediately tries to put up barriers to rationalize and justify why it would be okay to exclude, cheat here, cheat on this edge, maybe I don't report that income, maybe I over-report that deduction. And that's the natural psychology. The psychology in a consumption tax is totally different, which again, I won't get ahead to the solution, but a preview of coming attractions. Bob, also, underground economy, $1 trillion to $2 trillion a year, completely untaxed in our current income tax system. Compliance costs, $600 billion a year for you, I, and companies to comply with. That's a waste of money. That's each year to comply with the income tax.
Yeah, people say I spend $39.95 to get TurboTax and that's it, but there's a lot more to it than just that.
Absolutely. My firm, a Big Four public accounting firm, 1/3 of our entire business is our tax line of service, and I can tell you there's a lot of revenue coming in on that line of service, and that's part of the cost. That's part of the cost.
So you're part of the problem. I didn't really mean that. God, just
No. I'll self-nominate there. But I'm not a tax accountant. I'm in a different line of service. But I had to know enough to be dangerous enough to pass the CPA. A couple other quick things on the economy. Our income tax, it really makes education, which is, if you think about it, the key to escaping poverty in a lot of people's opinions. And I don't think very many people would argue with that. It makes education super expensive because you're paying with after-tax dollars. And the income tax also favors the rich. And you might say, really? Is that right? And let's think about one of our biggest deductions, the home mortgage interest deduction. it's like the 80-20 rule that 80% of the people that get to utilize that are like the richest 20% of people in America.
Yeah, the rest of us take the standard deduction.
Yes, that's right. That's exactly right. Especially now with the standard deduction being so high with the TCJA. But so I'm not saying that the home mortgage interest deduction is wrong in the current regime. It just definitely favors the rich when you look at the statistics of it.
All right, talk about how the income tax system drives jobs and innovation, drives our companies offshore.
Yeah, so let's think about a company here. So all those embedded taxes, and the Harvard PhD studies say that about 22 cents of every dollar that a company charges for a widget, about 22 cents, 22% are embedded taxes. And because those are income taxes along the way, when we want to sell, let's say Bob and Jade have a railroad company business and we sell railroads abroad. So that railroad car that you and I want to sell for $100, 22 bucks of it is taxes along the way. So in theory, we really, if we didn't have the taxes embedded in there, would be charging $78 instead of $100. And just to use simple numbers. Now, a lot of our European company competitors, they have a VAT tax, which is not entirely a consumption tax, but it's a tax along the way, along every stage of production. But guess what? Those governments refund those VAT taxes if you sell abroad. So
we're selling for 100 and they're selling for 78. Who are you going to buy from?
That's basically it. To put it in real simple terms, that's not a level playing field.
No. Now, go ahead.
It's really amazing that we're able to compete as good as we do with that embedded income tax disadvantage that we have there.
Okay. Now, good behavior is usually rewarded. Not so with the income tax.
That is right. So when you break out of the cycle of poverty, when you get a promotion, when you move up, you get taxed more and more. You get more lashes, and they're going to swing harder, is the phrase I like to use and have heard. By the way, when you're moving up and earning more, this doesn't come by accident. This means you're being more productive, you're solving problems, you're making Americans' life better because you're doing more and doing something better and more innovative. So shouldn't this type of behavior not only be rewarded but be encouraged?
Yeah, well, I've seen that work in the other direction. I personally know some folks who had to go to their bosses and say, would you kindly take back the raise you just gave me? I don't want this promotion because I'm going to be actually bringing home less money now under the new one than I was beforehand.
And you guys just had another lady who's running for Congress in your district in Florida say the same thing. She has a story like that.
Yes.
I think it's maybe Congressman Yoho's assistant.
Her name is Kat Kamek. She was Congressman Yoho's chief of staff for a while and is now running to replace him since he's retiring.
Yeah, it's just not right. And so under our income tax system, again, what's the problem? What's wrong? Savings and investment are not encouraged. So startups, new business ventures, entrepreneurs, there's an end things better that would make our life better. So again, it's amazing since 1913 we've been able to be as great a country as we've been, but it hasn't been without having to overcome obstacles and hurdles.
Okay, talk about divided we stand, divided we fall. United we stand, divided we fall here. The income tax does a wonderful job, and people don't understand this, how the income tax divides people.
Absolutely. So the income tax divides us into classes, right? It's always, well, this group who makes this much money, this group, and then it encourages a bickering and a fight. When you think about it, it embeds within us a concern, an interest in how much that other guy across the street earns and how much they make, and are they paying their fair share? And if you think about other aspects of life, Bob, so the guy 4 houses down and to the left of you, do you have any right to know what he does with his time, his money, his resources, where he works, what's in his bank account, how many bank accounts he has? Is that any of your business?
It's not any of my business, and actually it's none of the government's business either.
That's right, but the income tax makes it, inherently engineers us to worry and concern ourselves with such things. And so it also encourages a winners and losers mentality, meaning the American government, in all its wisdom, because once you get elected to Congress, you're automatically smarter. I don't know if you knew that, Bob.
Oh, absolutely, yes.
You go to Washington, D.C., and you're smarter. And so the income tax code has embedded this, well, we're going to pick winners and losers, or punish you if you're not in an industry, a business, a type of new product or service that we like. This goes against the very foundation of individual freedom to pursue the American dream with an equal playing field. That's all anyone really wants, is to not have the deck stacked against them when they go about their business. They might fail, they might succeed, but I just want a level playing field. I don't want the dealer to have all the aces when I'm playing blackjack and not have an equal distribution or chance that they might come around my way. It's just not right.
Oh, I agree with that. So I think you've pretty well established we've got a problem. And people have got
a problem here.
Quite a bit of data here on exactly what is wrong. Now, you said you didn't want to get too far ahead of yourself. Let's transition into the solution. I mean, what do we do next? How do we fix this thing?
Well, we have a few options. It's always good to give people options. If you just shove one solution down people's throats, they tend to not like that. So we can amend our current income tax code and work around the fringes. That's one option.
You can add to the 75,000 pages. You can attack a cumbersome, complex system by making it more cumbersome and more complex. That sounds those smart people that know more than we do. that's something
option A.
That's something they like to do. We keep an eye on them on FTPR. Go ahead. What else?
Well, no, Bob. Since 1913, that's basically been the option that we've all chosen as an American people, whether we're aware of it or not. Option A.
Okay. Well, what other options do we have?
We can do a flat tax. That's option B. And again, you and Ron are great at pointing out that a flat tax is really no different than option A, because it would flatten out the code. You'd still have an IRS. You'd still be taxing your income. And what would happen with the lobbyist? And by the way, the income tax code is the second most lobbied area in Washington, D.C., next to pharmaceuticals.
Mercy. I didn't know that.
Before you knew it, we'd have an exception here, a deduction here, an exclusion here, and a emoluments clause here, and we'd get right back to where we are. That's option 2, the flat tax.
Are you aware of what's happening in Illinois?
No.
Illinois, they have got a state income tax, but it's flat. And they are now trying to say, that's not fair. We need to, what the governor up there is calling his fair tax plan is not the fair tax at all. They want to change their flat income tax into a graduated income tax. Well, on the federal level, we've got a graduated income tax, and people are saying, let's fix it by making a flat tax. That sounds like a circular firing squad. So whichever one you've got, it stinks and you want the other.
Well said. So that's option B. Let's talk, what's a third option? A third option is the fair tax. It's a national consumption tax that you pay at the register once and only once for new retail goods and services with no income tax and no IRS and no corporate income tax and no gift tax and no estate tax and all of that.
Okay. Tell you what, let's go problem by problem here and see how the fair tax fixes it. Let's start with freedom.
Okay. So if we think about option C, the fair tax, we wouldn't have to report to the government the square footage of our house. Let's say if you're doing a home office deduction. You wouldn't have to tell them the make and model and year and mileage of your vehicle if you're doing a vehicle deduction for your business. You wouldn't have to send them a bank account number and a routing number if you want your direct deposit. You wouldn't have to even tell the government how much you earn. Or where you spend it and why you spend it or what you spend it on. So just on the surface, Bob, does what our current system employ with all the intrusions into our personal information versus what I just described with the fair tax, what sounds more akin to the freedom that we might be associated or associate ourselves with as Americans?
Yeah, I'll take the fair tax option on that.
Absolutely. It's a no-brainer. The great thing about The FAIRtax it's completely anonymous. You could be, if you're sadistic, you could keep all of your receipts online from Amazon, at the store, at Walmart or Lowe's or Home Depot. You could keep them all, and the FAIRtax Act requires that you show how much you paid in FAIRtax. You could sum it all up on a spreadsheet and say, I paid this much in a tax year. But you know the good thing? You don't have to if you don't want to.
You don't have to. And you can subtract from that figure the prebate. So how much of that is comes out of your pocket versus how much is paid for you, the taxes that's collected from you that you don't owe. Because with a FAIRtax, you do not owe anything until your spending rises above the poverty level. And rather than the government trying to get into the picking winners and losers again, we're going to tax this. No, that's a necessity. We're not going to tax this. And it grows to the big mutt mess that we've already got now. All right, I'll just collect it on everything and give you back what I took from you that I shouldn't have.
Well said. Exactly.
Nice and simple, works for everybody.
And a lot more freedom inherent there. It solves the problem of freedom.
Indeed. And I hear a lot of people saying we need to go to a flat tax because a flat tax will get rid of the IRS. Now put your CPA hat on that and address that point.
That's just patently false, and I'm sure some people say it not out of intentional deceit, but just not understanding how it works. A flat tax is a flat tax on your income. So you're still going to have an IRS to look at your income and what the tax rate is on that income, the multiplication, and then before you know it, the deductions, the exclusions, and all those exceptions that will come in like we just talked about. So a flat tax is just what we have now. It's just one rate instead of a multitude of graduated tax rates.
Okay, economy and jobs. Work on that one a while.
And also with IRS, Bob, I think we identified the IRS as a problem. The budget is $12 billion a year. Depending on the time, around 90,000 to 100,000 employees. That's a lot of people trying to monitor and take in what you and I make and take the tax off of that. The FAIRtax solves the problem of the IRS and civil asset forfeiture because there's no more individual corporate income tax. There's no more AMT. There's no more gift tax. There's no more estate tax or death tax. Problem solved. And so your next question was economy and jobs.
Yeah.
So we talked about how the economy is hindered. Imagine on a track, you've got the hurdles that you've got to jump over, right? It's like like our economy has every 10 feet hurdles, and they're like 6 feet high. And somehow we get over them pretty decently as a society and an economy. It's amazing that we do. But with the FAIRtax, GDP growth grows up. And again, not just Jade Walle, CPA, stating this. These are PhDs and the former head of the Harvard School of Economics. All these detailed studies, $21 million of grassroots research prove that GDP grows up, employment growth goes up, education becomes almost 40% cheaper with the FAIRtax. And so you think about economy and jobs, and then all the companies that would want to come here because there's no embedded income tax and the ultimate sales price of their widget to their customers, America would be the jobs haven of the entire world.
Now, you were talking to me earlier about this little provision that you call first mover advantage. What happens to the first country that gets rid of their corporate income tax?
I love that term. So we have to be the first country that enacts the FAIRtax because whoever does it first will get all the company's headquarters or their manufacturing facilities moving there first. And then once a company moves someplace, it's going to be much less likely that they'd move to a second place. Yeah. Say if we're the second or third country to adopt the FAIRtax.
Yeah, if I'm at a place where
whoever does it first.
Yeah, if I'm in a place where there's no corporate income tax and another country does the same thing, I've still got no incentive to move there. If I'm the first country to do that, I've got all the incentive on my side to draw all of this, folks. And we've got trillions, with a T, trillions of dollars hiding offshore, hiding from our tax system. What would happen to that?
Yes, if you think about it, there's no motivation whatsoever. So in the tax code, and not to get too detailed, there's ways to escape taxation if you're a U.S. multinational company and you've got foreign subsidiaries. Well, if I keep my money there and I don't repatriate it, I can avoid taxation if I'm putting it back into that foreign business, so to speak, and I don't repatriate. All of that goes away under the fair tax. You'd have no barrier to bringing all those trillions of dollars offshore, and a lot of money is offshore illegally as well as legally, and so both of those doors just come flooding in, and then it'll be spent, even if it's illegal money offshore, and it comes back to America. It gets spent at Walmart or at Amazon. The fair tax will be collected.
All right, talk about the fair tax relative to the carrot and stick issue.
Yep. So we talked about earlier, you get more lashes and they're harder. The more you do, the better you contribute to society and the more you earn. Under the fair tax, as you spend more, you do pay a little bit of a higher rate, just the way the mathematics work. But if you think about it, I as a low-income individual, I'm encouraged under the fair tax to go for it and make more and do better because I don't have to pay a regressive payroll tax. I also can save. I can buy used goods that the fair tax is not collected on, and I can better my station and my position in American life and not necessarily have a penalty to do so. Now, if I get to that stage that I want to buy that luxury yacht and it's new, I'm going to pay a hefty fair tax on it, but we should all be so thankful to reach that plateau, right?
Yeah, talk about how the fair tax can be a uniting force for the country.
Yeah, so I think one of the greatest advantages is all of a sudden I'm not concerned if Bob Paxton is making $1 million and does he spend $1 million or what does he do? I don't care about his income tax rate and if he's charged at 35% or 39.6%. All that matters is Bob's rich and he's going to spend more and he's going to pay more in taxes, and it's fair and it's transparent, and in the whole class warfare that we see every 4 years and every 2 years, no matter your political persuasion, it's always there's always a, hey, you're going to spend in tax, hey, you're going to you're gonna be rich and not be taxed enough, and you need to pay your fair share. There's all this animosity, but the fair tax, all that goes away because there's no more income tax. It just dissolves away, and the energy that our politicians spend we actually force them to focus on bigger problems instead of this every 4-year fight as to, well, what are you paying?
Yeah, but Jade, the fair tax is not fair. Bob Paxton is making $1 million a year and he's only spending half of it. He's not paying his fair share on that part that he's not spending.
Well, we have to educate people because if you don't spend something, the term that I love is it's deferred spending. And another thing, if Bob makes $1 million and spends $600,000, that $400,000 he's probably not putting under his mattress. I don't know, Bob. I don't know. You might be, but most people probably wouldn't.
I don't have a big enough mattress.
It's going in savings and investment. And when there's savings and investment, guess what happens? Entrepreneurs with good ideas, they get more chances because there's private equity firms investing and there's banks that are lending more. And it's just snowballing into this wonderful economy where there's more businesses, more jobs, more economy, and it really is a snowball. It just builds on itself. And it's actually, I worry about this, but it's a good problem. Our economy would be so hot and so heated with the fair tax, we'd have to really work on, well, do I raise interest rates to super high rates? And oh, by the way, the fair tax reduces interest rates too, because all the cost of taxation with banks that they build into their interest rates. Mm-hmm. The fair tax even lowers interest rates. Goodness, it would just be a hot economy. But I will take that problem, and you and I and Ron can solve that problem later after enactment. Okay,
well, I think you've made a pretty good case of how the fair tax is the solution to a lot of different kinds of problems. How do we move this thing forward? Fair tax has been in Congress for 20 years. It's died in committee every single year for 20 years running, and it's probably going to die in committee again in this Congress. How do we make progress on getting this thing to get the solution implemented?
It's a good question, and so I've been thinking about that because we've been doing this for a couple of years, and so I'm always looking for a new angle of, well, how can we change people's minds? How can we convince people? And I read an interesting article in the Wall Street Journal, February 22nd. It was called "How to Change Anyone's Mind," in the February 22nd edition. It addressed 5 areas that we should think about when attempting to change someone's mind. So in our case, supporting the fair tax as a replacement of the current income and payroll tax system. First is to reduce reactance, and that's a term I didn't realize, but it has to
define that for us here.
Yeah, so I think reactance here, it has to do with electric and electronic systems, and reactance is the opposition of a circuit element to the flow of current. So way beyond my pay grade, okay? But so to reduce reactance, what this author was talking about is people like to feel like they're in control, and they have an innate anti-persuasion radar. So even with something as horrible as the income tax, we proved that the problem is ever present. A way to counteract this is to present multiple options or solutions to the problem, like we've done here today. There's the fair tax, there's the flat tax, there's the fair tax, there's tinkering with the income tax code. I think we've proven that perhaps our solution of the fair tax is the best, but you can't just say, here's one solution, there's multiple possible solutions, and then talk about the options. And you kind of make the reader or the listener kind of help their mind gravitate to the obvious answer. And I think we've done that here today.
All right, next point.
Number 2, eased endowment. People are over-attached to the status quo. And again, can't believe it, but it's true. It's a human characteristic. Scientists call this the endowment effect. This is typically combated by bringing the cost of inaction to the surface. There was a financial advisor who tried everything to convince their middle-aged client that keeping large amounts of money in a low-interest savings account, aka the mattress, was not good for him in the long term. He wouldn't budge. Finally, the advisor began giving him regular updates on how much he was losing monthly compared with inflation and higher return investments, and that finally worked. So, at the macro level, we know the IRS costs us all $12 billion a year, and the money is spent complying with the tax code in the U.S. government is about $600 billion a year, $800 billion in illegal evasion, along with $2 trillion in underground economy and offshore funds. However, let's make it more personal. These are all macro things.
Okay.
Each month that we don't adopt the fair tax, we're missing out on a real monthly prebate. Right now, that'd be $661 a month for a family of 4 into your bank account. Each paycheck, we're also missing out on keeping our entire paycheck, 3 of federal Social Security and Medicare tax withholdings, right? Otherwise keeping our whole paycheck. So for an average family of 4's U.S. income, around $65,000, this means that nearly $5,000 a year in FICA tax withholdings that you keep paying that you don't have to. Imagine $5,000 more in your pocket each year. Not a bad raise, but wait, there's more.
Oh, goody.
The average American pays around $10,000 in federal income tax each year, which will be non-existent with the fair tax. This is another $10,000 increase to your take-home pay that we're all currently missing out on under the income tax. Yeah, so there's my attempt to ease endowment.
Yeah, but the fair tax is going to make everything I buy 23% more expensive.
That's right. Bob, stop misrepresenting the facts. Bob, I can't speak. What we don't realize is the studies prove that those embedded taxes fall out. So on average, everything will be 22% cheaper. Every $1 that we pay, like we said earlier, 22 cents of it is the income tax.
So you take that 22 cents out, put the fair tax in, and it's basically a wash, and now you've got your whole paycheck to do that with.
It's basically a wash. Let's just say even it's just a few percentage points higher that we end up paying at the register. Embedded taxes go away, fair tax comes in, and we pay a few more cents at the register, but you're keeping your whole paycheck and you're receiving your prebate in the mail. When it comes to net purchasing power, the studies prove you have more money in your pocket after buying your necessities of life with the fair tax than you do under the income tax.
Okay, that's 2 points. Go ahead to point 3.
Point 3 is shrink distance. When new information comes in, people tend to compare it to their existing views. Psychological experiments have found a zone of acceptance, an area close enough to people's existing beliefs that they'll consider new information. A typical technique is to try and break new information into chunks so we don't overwhelm people with too much new information.
So if it's too far outside the box, they don't buy it. If you can bring it kind of close to inside to how they're thinking, you can get to them.
That's right. So the great thing about today's presentation is that all the history and the current problems are objective fact. maybe some new learning, but really no new information that wasn't already known, even if it only at some subconscious level, by most of us. Lastly, the fair tax happens to be the simplest solution ever devised. It's elegantly simple, and it doesn't take a leap of faith to innately realize it'll be better for all Americans. So said a different way, the fair tax isn't complex with 1,800 pages of this and 2,000 pages of exceptions and forms you have to do that would be difficult for us to conceptualize. It's just you pay it at the register. What could be easier than that? So I think that's a short enough distance that people can gravitate to.
Okay, well, if you've got a constantly changing tax code, and I'm a business trying to make a 10-year plan, how do you do that? You don't.
There's so much uncertainty, to your point, Bob. In businesses, it's been proven with survey after survey, businesses relish continuity and being able to plan for the future and not having the rug pulled out from under them when it comes to tax code and how they can plan around that economically. You're spot on.
Every time the other party takes control of the government, everything changes around. And that works in both directions.
Yes, and it plays into our fourth point of this article about alleviating uncertainty. Change usually involves some level of risk, and people generally impose an uncertainty tax on changes and new ideas. I think people do that, businesses do that now with the income tax. To counter uncertainty, marketers often allow customers to experience the new product themselves. Another technique is to make things that are new, make them reversible. If you don't like it, you can return it for free. The very last clause of the Fair Tax Act is what's known as the sunset provision. And it requires in the statute that if we do not like the fair tax after 7 years of enactment, meaning that the 16th Amendment hasn't been repealed, that the fair tax goes away and you get your income tax back exactly like it was. So when it comes to alleviating uncertainty, the fair tax says you get your money back for free if you don't like it at the end of 7 years.
And the try it and see if it works. Look at Alabama and Georgia.
Yes, good point. Good point.
All right.
Those getting close to passing a state level fair tax. So I'm really hopeful that happens so we can, like you said, see how it works at the state level.
Okay, well, if you make an assertion to somebody and nobody else seems to agree with you, you're probably not going to get paid a lot of attention. But if several different folks can kind of say the same thing, you get corroborating evidence from both sides here. How can we make that work to our advantage as fair tax people?
Yep, that's the last and fifth point of this article. It's talking about when you're trying to convince someone of a new idea, find corroborating evidence. And for big changes, make no mistake, the fair tax is a big change. Sometimes hearing from one person isn't enough. We just, when we're thinking about something that's large and massive, just hearing from one person, as eloquent as they might be, isn't enough. And so even if you're Steve Hayes, the president of AFFT, he can make it so simple and articulate it so well. We kind of might need to hear from more than just Steve Hayes. Okay. And this is evident in human history. So it's a defense mechanism. So there's strength in numbers. So I would say my encouragement to all of us as fair tax supporters and those who think it's a good idea, we need multiple people, having several of you discuss with your friends and colleagues and family members about the fair tax and how great it is. So I love, there's an old adage, if someone says you have a tail, you laugh and you think they're crazy, but if 3 people say it, you turn around and look, right? So we need 3 people to say the fair tax is awesome. And so spread the word about the webinar, spread the word about the Fair Tax Power Radio, and let's get it done. I think we can do it. Yeah,
I'm kind of thinking that when Neil Bortz was still on the radio, he was basically the only voice talking about the fair tax. And when he retired, it just disappeared from the national scene. You ask Kennedy, you ask Limbaugh, you ask Mark Levin, you ask some of these other people that have a national platform what they think of the fair tax. Oh, I like it, but you never hear them talking about it. How do we fix that?
Yeah, that's a good problem. It's a good question. I think one of your Florida Fair Tax Board members and National Board member, Randy Fisher, I think you guys recently commented about how he called into the Rush Limbaugh show. He did. And there was a guest speaker. He talked to a guest host who turned out to be a fair tax supporter. But how do we turn those fair tax, closet fair tax supporters into open advocates?
So their voices can be heard, and you can get that. He's talking, and somebody else likes it, and this guy likes it, and this guy likes it. Right now, there's just nothing in the media at all from anybody about it, and we need to fix that.
We do, and I don't have a silver bullet for you, Bob. Sometimes we feel like lone voices crying out in the wilderness. But I say, one, don't lose heart. Take heart, because I think this. It helps having, marketers always say it helps having a product that's great, right? If you're selling an Apple iPhone, as opposed to some, rinky-dink phone, the Apple iPhone's nicer, and it kind of helps having a good product. The FAIRtax is a good system. It's better than the income tax. It's an elegant solution to this horrible monstrosity, this Frankenstein that we put together that's 75,000 pages. So I think don't lose heart. Tell more people. Let's be intentional about talking to people, intentional about going to talk to our congressman. I talked to my congressman a couple years ago. And again, I'm just one nobody. I'm a nobody. And my congressman, after I talked to him, he actually went and talked to the chairman of the House Ways and Means Committee, Kevin Brady out of Texas. Again, this is a couple of years ago before the 2018 elections. And he asked him about it because I told him Kevin Brady had been a supporter in the past. We had a follow-up phone call. So even just one nobody talked to his congressman, and then he talked to the chairman of the House Ways and Means Committee. So I'd say don't underestimate the power of one voice, having a meeting with your congressman. But to ultimately answer your question, I don't have a good answer, Bob. Otherwise, I would have done it by now.
All right. Well, we sure appreciate your time and all of your efforts that you've been putting into the FAIRtax, and we will see you, every 3 months now we do these webinars.
That's right. And let me encourage any listeners, go back and listen to FAIRtax Power Radio episode 64. And the whole theme is declaring your independence from the income tax. And as we're celebrating our nation's 244th birthday, come July 4th here in a couple weeks, that would be a great episode to listen to.
Yeah, well, we're going to be going up to Winston-Salem to do a live show on July the 5th, and I think we're going to make that a similarly themed episode. Of course, hopefully we'll be taking some phone calls and talking to folks, but we'll just see how that goes.
Excellent. Thanks, Bob.
All right. Well, thank you for your time, and we'll catch you again in 3 months.
All right.